Each of us lives dependent and bound by our individual knowledge and our awareness. All that is what we call reality. However, both knowledge and awareness are equivocal. One's reality might be another's illusion. We all live inside our own fantasies.
Good morning, boys. I hope you guys had an amazing Christmas. We are back with another trade breakdown. I apologize for the cut recording. Ended up taking 2 losses and 1 trade stopped out in profit. My pause key is Shift P on OBS, so whenever I'm typing, I accidentally do that. Didn't realize. Doesn't matter though, because we are going to recap all the trades taken today. However, before we recap that, this week was a losing week. Was a red week this week. Now, you guys know I'm not one to act based upon red week, green week. We continue to act according to our model day in and day out. However, there is one thing I want to comment on throughout this week, which is execution. This week, we had a multitude of good executions throughout the week. This week wasn't as bad as it may seem. It was actually a pretty good week. We had a multitude of trades run within significant R. I probably had around 6 R in profit running that had gotten stopped out at break even, such as today's trade, which ran over $5,000 in profit across all the accounts, of course. Obviously, I'm trading multiple accounts. And on Monday, which we ended up reversing due to this one thing, over targeting. Monday, we over targeted past the new week opening gap, and today we over targeted past the external range liquidity. And on Tuesday, obviously, I'm not in shoulda, woulda, coulda, type of individual, but we ended up missing Tuesday's long to the upside due to failing to react. But let's brush that aside and focus on the 2 initial losses on Monday and today, which ended up being reversals. Now, before we get into those, we'll get into those in a bit. I want to recap today and then how today ties into Monday and, today. Starting off on the trading day, I was actually looking to continue bearish due to having all this low resistance liquidity down here. I was looking to see all of it taken out. We had some trading below midnight open and a bit of trading above, but as we continue to the upside, we were forming that open high or open low high close on the weekly time frame. If I showcase that right here, we anticipated another bullish week on Sunday, which we ended up forming. So I wanted to see that open low high close with a slight retracement, taking out that low resistance liquidity, as well as the fact that we had no other targets, no other swing points we could look to take out, if we were looking to go long, So I was really heavily looking to see that low resistance liquidity going into market open. What happened into market open? How do we end up taking 2 losses? High key more than we needed to. Well, these were taken on the 30-second time frame. We acknowledged the fact that we had an opposing power of 3 right here, but going into market open, we had formed this 1-minute rejection block with a sequential SMT, session sequential SMT, continuing to the upside. After taking this high, that is when I began to look for any sort of reversal to the downside. I executed upon a 30-second change in state of delivery. It was a messier change in state of delivery. It was almost like the one I would classify as last week that wouldn't fully classify as a change in state of delivery. However, it could still semi-pass it was definitely a fake out due to this displacement candle. That is what got me to truly execute upon that change state of delivery once we had that SMT off of the highs. Once we got stopped out on that, that's when I executed again upon this candle, looking to go short. You can tell I really was looking to see all the slow resistance liquidity taken out. However, I was not properly timing my executions with the quarters. That's when going into Q3, I was like, okay, wait, I took 2 losses. Let me take a step back. I was like, my timing is completely off. Let me take a step back. I'm too focused on a winning trade rather than aligning what I know needs to align to create a good trade. So what did I do? I waited till Q3 open, and this trade, we had a clear 1 minute change of state of delivery to the downside. This was our execution right here. But guess what? Due to having been traumatized from the last 2 executions, I held off on executing upon this trade and chose to execute upon a retracement instead, which actually cost me the entire trading day, and I'll explain how right now. Once we had this change of state of delivery right here on this candle at 9:48, that's when we could have executed right here, SL above the high, which is exactly what I was looking to do, targeting the low objective down here for 4R. Solid trade idea, right? Cool. However, we chose to pass and instead execute upon the first PD ray that formed from the displacement after that change of state of delivery, which was right here. Once we had this strong leg to the downside, retracing back for this 1 minute rejection block, still having that SSMT, which I wanted to see invalid. That's when we executed. The trade risk reward was still valid. This is how our trade execution looked. Great trade overall. This was $180 risk. Beautiful execution at the CE. Even scaled in an additional 2 contracts throughout this trade, I'm pretty sure. Targeting this low right here. Now, I'm going to pause before I continue talking because this trade had wrong RR. This was the RR. If the trade was this RR, I would have been out of it. I was like 1 of 5. Chat. No, sorry. This was where SL was. So it was a 1 to 2.8 R. That's why I ended up scaling in additional contracts. The risk reward wasn't exactly what I liked it to be. I just wasn't satisfied with the risk reward. So scaling into additional contracts as price continued to play out, this was the manipulation phase. So we were continuing to follow through with that AMD to the downside. Price continued to distribute here. Scaled in an additional contract once we displaced through this SSMT and this 1 minute rejection block. I was like, okay, cool. We have great confidence to scale in additional contracts. Had stops in profit, looking to target this low. However, I was looking to target even further at the negative 4 to 4.5 standard deviation, which were these lows from Thursday. Now, did I think that was a large target? Yes, I did think that was a very large target. However, I was like, hey, with the displacement we have, it's only around 50 points. Let's target it. I knew, though, going into this trade, my main objective, my clear low-hanging fruit on the trading day would have been this low made during London lows. But I chose to be greedy. I was a greedy boy this week, and I bit off more than I could chew. And that is what led to this week not even being just a break-even week, but a losing week. Monday, this exact same thing happened. We instead chose to target not the new week opening gap, but the CE of the new week opening gap. When we knew the new week opening gap was the clear objective. We knew that going into the trading day on Monday. And we knew today, going into this trading day, that the clear objective was this low-hanging fruit down here. Now, with this having been a losing week, I'm not beating myself up about this being a losing week. And a lot of people may say, oh, it's cope when you choose to talk as much as you do. You should just move on with the loss. However, I'm trying to move on with the losing week, understanding what to do better next week, because this week was not a losing week, like I've already said, due to, you know, psychological loss or horrible trades or breaking my rules. It was something that I can change, which is why moving forward I want to change this. Now, I do prefer a higher risk to reward, but I do think I choose to forget at times, and I choose to forget, I actively choose this, to forget how much even 1 to 3 RR compounds and how quickly it compounds. And the fact that as a trader, my job is to react to what price action is doing and not try to force an outcome that I see fit, that the market clearly doesn't want to follow, which in that case has been targeting further than the objective on the trading day. This week was a great week. Moving forward next week, our only focus is to properly react to price action. What do I mean by this? Because I'm not trying to move forward saying something, but not having full clarity on what to do or how to improve. Targeting proper objective. Starting with that. If I get my high risk reward entry, cool, I get my high risk reward entry. If I don't, I settle with that and simply trade to the objective toward low hanging fruit, regardless of what the risk reward will be. If it's 1-to-1 R, I won't take it. I don't take 1-to-1 Rs, as you guys know. If it's 1-to-2, anything above that, I'm completely fine with that. I'll react to what price action is doing. I want to start with that. We will learn to filter out our losing trades taken throughout the week as we continue to execute upon our model going into the new year. So I'm not concerned about that because my RR alone already makes up for all of that. But what I need to first focus on is taking those winning trades and taking the profits I have on the table, because these aren't trades that I'm looking upon in hindsight like, oh, well, if I would have executed here. No. These were trades that were taken, these were trades that ran into profit, these were trades that hit the objective, the draw on liquidity, and these were trades that I chose to continue to stay in, which ended up leading to a reversal due to me having been greedy. That is all I have to comment on this week. B tier week. I'm excited to continue to move forward and improve. I don't know what else to say. Refine, review, refine, and reflect. Or review, reflect, and refine. There you go. Love you guys, and I will see you. Oh, wait. I guess I'll show you guys the P&L. There you go. Okay. Love you guys, and I will see you in the next trade recap on Monday. Peace.